Today's lesson is for the people like you that are turning 65 and eligible for Medicare, but you're going to keep working, or your spouse is going to keep working, and you're covered under group insurance, and you're wondering, should I sign up for Medicare now, or can I wait till later? And this is the number one question that we get with people calling in, and people are generally real concerned about this. And what they're real concerned, because they've read enough, is there are penalties if you get this wrong. And this is the number one thing that they're concerned about. And they want our consulting and our advice, like, should I go ahead and sign up for Medicare? I don't think I need it, but I might need it, but I sure need it later. And I don't want to pay these penalties. I don't really understand them, but will I have to pay these penalties? What do you think? We even get people typing this in on the bottom of the videos. So I'm going to work to giving you a framework for advice, and my framework for advice really doesn't replace a consultation, because everybody's situation is different, and you really need to get some help with this. Now, the thing that they ought to be more concerned about is if you don't get this right and you delay in signing up for Medicare, stay on your group insurance, and then you later want it, and you haven't met all the rules, and this works out to be a bad decision of skipping Medicare or delaying Medicare, you are going to face a delay in actually getting Medicare. So there's two problems with the delay if you don't have it right. One is you're going to pay a penalty, and those penalties are for life. I mean, once they start, then they're going to go on for the rest of your life. And then the second thing is, like, say you all of a sudden need Medicare in like June or July, and if you don't qualify for a special enrollment period, you're going to have to wait till January to March to apply of the next year. And then if you apply and are accepted January to March, it doesn't start till July 1st of the next year. So you've had this big gap where you're now a Medicare age person, your insurance has ended, and you have a delay in getting onto Medicare. Big problem. So that doesn't necessarily happen to that many people, but it can happen to enough. And then we have people like that calling us in, oh no, what do I do? And there are things we can do to try to work the system to get you. So if you're one of those people where you delayed way back when and now you're discovering you got a problem, give us a call and we'll try to work through the situation with you. So now, the real thing to delay is I've got group insurance. I'm happy with it. It doesn't cost me a lot, and I'm going to keep on working. I don't know how long, or 2 more years, or 3 more years, or an indefinite period of time. Happy with my group insurance, don't pay a lot, and I really don't even want to mess with all this Medicare stuff, but I got this one little thing that I want to ask you, which is the topic of today's video. So it's what we're trying to prevent are penalties later and a delay. And so we've got work insurance, and then the first question we have for these people, what about your spouse? You know, I mean, the first thing is your spouse older than you, or is your spouse younger than you? Because if your spouse is younger than you, they're not eligible for Medicare now at some point in the future. And then the next question about the spouse is, are they covered under your group insurance? And if the answer to that is yes, and you need them to be covered, let's just say they're 62, you're turning 65, they're going to need health insurance for the next 3 years. And if you're going to keep working, and you plan to keep working anyhow, and plan to stay on the group insurance, then you're going to want to stay on that group insurance because you need to cover them. And a lot of group insurance will not let you cover a dependent or a spouse, even if you're still working, unless you're enrolled in the group insurance yourself. So we need to go to the spouse, and many of the spouses that are 3 years younger or 7 years younger, they're still working. They have their own group insurance at their own place, so we don't need to we don't need to worry about that. We also have people in that situation that are turning 65 now, but they've been retired for a while, but they're covered under their younger spouse's group insurance. So they're wondering, should I stay on this covered under spouse's group insurance, or should I sign up for Medicare and get my own? So people are all over the board in their places, and I don't really want to get into doing planning and a ton of examples today, because I really want to just walk you through the material. So first thing we need to look at is, yes, you're keeping working. Yes, you have group insurance. And then we need to find out, is the spouse reliant upon this group insurance? Yes or no? And then what are their other options to make it to 65, just like you are now, to then get on Medicare? Okay? So we need to clear all that up. Once we have the answer to all those questions, now we need to just look at the work insurance. I mean, we need to look at the group insurance at work, and we need to say, first of all, how good is this? You know, a lot of people say, how do you like? Oh, it's good. I love it. And then they haven't been sick, other than going to the doctor and it covers the doctor's visits, or they got some medicines. But, you know, when we dig a little deeper, what's your deductible? And a lot of group insurance now has a high deductible, you know, $3,000, $4,000, $5,000, $6,000. And then it's not 100% after that. It's, you know, 80-20 or 70-30. And so if you were to have a serious sickness come on you, you might be looking at your group insurance and you might be out 10 grand. And so that doesn't mean dump the group insurance. It's just, we're going to want to look into the group insurance. You're going to want to look into your group insurance and just see, how good is this group insurance, and how good is it going to be if I have a serious illness? Okay, because you now have alternatives, and that alternative is Medicare. So now we're looking at, do I really want to stay on the group insurance? And then besides the benefits and the deductibles and co-payments and all that kind of stuff, the next thing is, how much do I pay personally for this group insurance? Do I pay $400 or $500 a month? How much do I pay for my spouse? You know, if your spouse is covered on it and he or she is about your same age, then, you know, we're back on the spouse thing. But you're just going to want to look at your out-of-pocket money that you're kicking into this group insurance, and we're going to want to come up with a monthly number, because it's probably not going to be that expensive, or as expensive as you think, to get on Medicare. I mean, for Part B, you got $148.50 a month is the standard premium. But if you make a lot of income, then you're going to have IRMA on top of that. And so all of these are not leading to sign up for Medicare, but we're just going to want to look at the whole situation and say, how much would it cost me to dump the group insurance? Then I'm going to save whatever I'm paying for the group for either me or my spouse and me. Then, so how much am I kicking out now? And then how much will I kick out for Medicare? And then how much will a supplement be? How much will a Medicare Advantage plan be? Which a lot of times those are zero. And we put all the money together. You may find out after we do this research that you're actually going to be better off coverage-wise, and maybe about the same for money you're kicking out. And you may say, it's going to be a good decision for me to dump the group insurance. You know, I can't make those in advance, but I'm just walking you through what we do with people to really make this first decision. Do I want to sign up for Medicare at 65, or do I want to delay? Now we're going to get in, do you have the option to delay? And to delay means you're still working, you're actively working, you're not a retiree, past 65, and your coverage that you have on the group insurance is what Medicare calls creditable. It's not credible, it's creditable, meaning that Medicare has all their own rules, and they require you to avoid these penalties, if you want to avoid these penalties later, to prove to them when you later get onto Medicare has the coverage. So from 65 to 68, which I just turned yesterday, those 3 years or 36 months that I didn't have Medicare, did I have creditable coverage? Yes or no? And if you didn't have creditable coverage, then you're going to face penalties, and you're going to face that delay thing, is you're not going to be able to get on it right away, and that's going to create another problem. So what we want to do is we really want to look at your group insurance now, before you're 65, before you make that decision, and say, is it creditable? And it's pretty simple. If you look at my chart here, creditable coverage is really a group health plan from an employer that employs more than 20 employees. I just had a guy calling in a couple days ago, and we got to talk to him, and his employer has 15 employees. And it took us a while to get to that. And I said, well, you don't really have the option of staying on that group insurance. And I'm guessing your employer is going to be thrilled when you go on Medicare, because for you and your spouse, they're paying a tremendous amount of money, probably a couple grand a month, to cover you. And then you're paying a little part of that. And and furthermore, if you stayed on that, your coverage is not going to be credible. It's going to be over here in the non-creditable, because you're on a group of plan. And we get lots of people later on that come in, and they've kind of thought they were all right. Maybe they're a professional, like a lawyer or a CPA, and they were paying for all this. So the first thing they're upset about, you mean to tell me that I could have dumped this insurance several years ago when I turned 65 and saved this $2,000 a month, and I could have changed and gone on Medicare and paid my Part B and a little bit of IRMA and bought a supplement, and I would have been paying $400 a month or $300 a month instead of $2,000. Yeah, that's exactly what they didn't get any consulting. They just kept right on trucking, leaving everything like it is. And then now we got to deal with the penalties and the delay. And many times we're able to work through this and do some consulting and fill out some forms, and we can fix things for people. But, I don't want you relying on that. So the real thing of the creditable coverage, is this coverage creditable? And to be creditable, it needs to be a group health plan in a business where there's more than 20 employees. Now, I'm going to go over some things that are non-creditable coverage. And one of the biggest ones is COBRA. We have lots of people that come to us that are like 67, they retired at 65, they didn't sign up for Medicare, perhaps they're a highly paid executive, and when they retired at 65 or 66 or whatever, the employer, as part of their retirement package, said, oh, we're going to pay COBRA for both of you, the husband and wife. We're going to pay that for you for the whole 18 months just as an adjustment for retirement. So then they just keep right on trucking. They got this wonderful employer. And then at the end of the 18 months, they're coming to us, hey, now I need to get on Medicare. That COBRA doesn't count as a creditable coverage. Even though it was group insurance, they were retired, doesn't count. Retiree plans. So there's a lot of places that offer well, not as many as anymore. A lot of governments, they have a retiree plan. But Medicare, most retiree plans require you to sign up for Medicare anyhow. I mean, that's underneath the base of that, and then they sit on top of it. But if you are not signed up for Medicare, you can't later get on Medicare and use your retiree plan as a way to get out of this. Marketplace plans. We have people that were on this thing with the government, and maybe they were getting a subsidy on the marketplace. They were under 65, and then they just keep it somehow. And then they come to us later, or they're asking us in advance, can I just keep the marketplace coverage? And the answer to that, well, yeah, maybe you can, but it's not going to count as creditable coverage, so we really need to take a serious look at getting on Medicare. Same with TRICARE, same with veterans benefits, because we have many people at 65 say, oh, I'm going to rely on the VA. So, and that's good, and if you're going to rely on the VA for the rest of your life, and you know you qualify, more power to you, and, we'll even help you with that. But if you later at 75 years old, you say, I think I'd rather have private insurance now. So I don't want to get on the regular Medicare and I want to get on a supplement. You're not going to be able to use the veterans as an excuse. And then the FEHB is the Federal Employees Health Benefit. So there's more on this list. I just simply wanted to teach you that you need to, in advance, determine whether your solution for Medicare past 65 is going to be looked upon as creditable. And for the most practical purposes, that's large groups, large group insurance, still working past 65. I'm Hans Scheil. I thank you for listening.